Electric car companies have been red hot lately, including Workhorse. The Cincinnati-based manufacturer designs and builds electric delivery trucks and drones. The stock has been on an absolute tear over the past 3 months, surging more than 450%. It also got a nice pop earlier this week when Lordstown Motors announced it was going public through a SPAC. Workhorse owns a 10% stake in Lordstown. Joining us now is the CEO of Workhorse, Duane Hughes. Duane, great to have you with us on the show.
Great to be here. We appreciate the opportunity to be with you, Melissa.
You know what is amazing about this story, Duane, is that your stock, you've been public for about a decade and nothing. And then all of a sudden in the past few months, it's just gone high. It's gone from 2 and change to 16 and change where it is today. What do you think accounts for this rise? Is it a match in a change in the fundamental state of your company?
You know, it's a combination of things, I believe. You know, there's been a big spotlight shown on the electric vehicle space. You mentioned we're out of Cincinnati, Ohio, and it's been really difficult over the years to scream loud enough as an automotive OEM out of Cincinnati to get the attention we feel like we deserve based on the performance of our vehicles that have been on the road with more than 6 million miles. But again, that spotlight that's been recently shown through different SPAC vehicles, such as the Lordstown announcement, that brings additional attention to us and has given us an opportunity to demonstrate our proof of performance and the things that we've been doing well and continue to do well. So I'd like to think that a lot of it is because of our performance as a company, but it's also just that people are taking a much higher profile view of the EV space now.
Right. And we should note that you're going to report earnings on August 10th, so you can't get too deep in the weeds on specifics. But I do want to talk about your business and maybe some of the reasons why the stock may be rocketing higher at this point. Can you talk to us about your expected production ramp and the bookings that you have so far? You know, between the fourth quarter and the first quarter, we saw a pretty steep decline in the dollar amount of vehicles delivered, 364,000 to 84,000 in the first quarter. And I'm wondering what you see as the trajectory going forward.
Yeah, that's a great question. I appreciate that. In reality, we delivered our first vehicles in March of 2015, and we delivered our Generation 1 electric vehicles through December of 2017. At that point, we, I'll say, took a pause and paid attention to our customers, did a lot of learning over the experience of having those vehicles on live duty routes, the 6 million miles I mentioned before on the road. And we were able to really identify what the electric vehicle of the future really is for our commercial fleet customers, primarily in the, the parcel delivery space and the last mile delivery space altogether. So since our redesign, which I see you showing on the screen there, and identifying things such as the weight of the vehicle. For example, a combustion engine step van that's used for parcel delivery today, they weigh about 11,000 pounds before you put the first package in it.
Right.
What we identified was the ability to reduce that weight would allow us to right-size the battery pack, give us a better opportunity, as well as our fleet customers an opportunity to have a stronger ROI and a total cost of ownership savings. And so taking on the things that differentiate us, such as those weight savings, have given us an opportunity to now move into production this year, where we've already delivered the first 2 of our Generation 2 vehicles. And we're really loading up, if you will, to deliver primarily in the fourth quarter of roughly 300 vehicles this year on a backlog of roughly 1,200 that we have currently and continuing to grow.
So you've delivered 2 vehicles so far. You aim to have 300 by the end of this year. Is that
correct?
Okay.
Correct.
In the meantime, Duane, I want to talk to you about your cash position. You ended the previous quarter. I understand you have another quarter that you're going to be reporting shortly with $16 million in cash. All your expenses have gone higher in the meantime. Cost of goods sold, SG&A, research and development. You're burning cash. How long is that $16 million going to last, especially as you are ramping up to go from 2 delivered to 300 by the end of the year?
Very good question. And I think we publicly announced just the other day or a week or so ago that we have over $100 million in cash at this point due to a new financing we brought in addition to the warrants that came in cash. So we are in our strongest position. I'll say it this way. For a company with the most amount of electric trucks on the road given any other company in the U.S. We are now in our strongest cash position that we've ever been in, and we feel very good about our position in cash as well as our ability to deliver on the orders.
What can you tell us about the status of the U.S. Postal Service potential contract? That contract could be worth as much as about $5 to $6 billion. You could get a partial award. You could get a full award. You submitted the RFP, I think, mid-July. When will you know? Your CFO recently said that this award would be transformative for the company. I mean, I would imagine that would be so if your cash position right now is about $100 million. I mean, that contract could be, truly changing for your company.
Yeah, I would say any contract like that would be changing for any company virtually. In our case, we're unable to speak about the post office at all. I have to say no comment because, we're under a gag order of not to talk about it. But certainly, to your point, any contract that's worth billions of dollars coming into a company like ours would be a very, company-changing experience. When
do you expect to hear?
We don't really have a timeline for that. Publicly stated, the post office had their original information was, I believe, somewhere in that 90-day range after the RFP responses, but that was part of the program from the very beginning, so we do not have an answer to that today.
Okay, and if you got that award, that would be $300 by the end of the year plus whatever it is for the Postal Service?
Correct.
Okay. Duane, great to speak with you. Hope you'll come back on the show sometime soon.
Yep, would love it. Thank you for taking the time, and have a good day.
You too. All right. This is a stock that we have seen just flash on our screens with this frenzy over EVs. Guy, what do you make of a business like this? I mean, this goes into the whole fabric of investing for future vision at this point.
Yeah, without question. I think they report this Monday. Big short interest in the name. The risk reward. Look. Again, $100 table, but you've seen big short interest names have explosive moves to the upside post-earnings, and my sense is you could see similar with this name. It's a real story that you're going to continue to hear about. It's an Ohio-based company, as you mentioned, battleground state. There are a lot of interesting things that can come. There'll be positive tailwinds for this stock. So look for earnings on Monday and look for that short covering rally.
Yeah, according to FactSet, it's a 34% short interest, Steve Grasso.
Yeah, these are names, as Guy said, $100 table, deep end of the pool. But the problem with these is what you just said before, that if all these contracts don't come to fruition, this company was running out of cash by the end of 2020, obviously on that $16 million number. He corrected you and said they have $100 million. So I think you have to really kind of play it safe in these things because with a Tesla name, there's a lot of deep pockets and multi-levers to pull. I'm not sure how the depth is on something like this. This seems like a Robin Hood trade to me if there ever was one. Doesn't it feel like that to you?
Well, I mean, the other flip side to this is with all the excitement over EVs, Karen, it might be easier to get financing. I mean, we saw Marathon Asset Management come in. That was one of the major sources of funding for this company recently, expanding that $16 million cash stockpile at the end of the first quarter. So maybe it's a decent time to be a company like this that is looking for funds and financing.
Right, or maybe it's a decent time to do an equity offering, given the excitement around it that sort of bakes in a lot of good things happening, which may happen. They might happen. But, we've seen companies, look at Virgin Galactic doing an offering, taking advantage of the market. Nikola, I mean, they should. I think $100 million sounds like a lot, but if they want to scale up the way they want to and hope to, they're going to need a lot more than that.
Yeah, manufacturing costs a lot of money, Tim Seymour.
Yeah, I mean, look, the bottom line is if you see, we've talked about SPACs, we've talked about these pipes, there's a lot of liquidity out there. The EV space is a story space, but and we're seeing that there's some very charismatic, visionary folks at the helm. But to what extent, the key difference also, obviously, for someone like these guys in Tesla, many of these folks we're talking about are purely focused on the commercial market. And that is a market where I think there's a very specific niche and a fleet customer to fill. What's also very interesting, though, at a time when, as someone who was very certainly concerned, critical about the competitive environment for Tesla, all this is really doing is pointing out the opportunity in EV. And maybe, if anything, this is a case where it's actually supporting the Tesla head start. But it's very interesting because I think the competitive landscape is something Tesla really does need to worry about. But if the recent focus on this entire sector, if anything, has had folks feel very confident about the position that Tesla has.